Intel is falling into bear market territory today. Raymond James downgrading the stock to underperform. Boy, they say the headwinds are beginning to mount. It's our call of the day. Stock's down 12%. You see there in 2 months, down 1 2/3% today. Jim, I go with you. And the most telling part of this downgrade is the following. Our rating was underperformed for most of last year, but we moved to a neutral stance since demand conditions were so strong in the first half of 18. Now they've gone back.
Okay.
They tried, but they went back.
Yeah. Well, look, if you read the note, there's absolutely nothing new in this versus yesterday. We spoke about it yesterday. I think we spoke about it last week. We certainly spoke about it last month. And there is literally nothing new in this. Actually, I'm sorry, there is one thing new, which is to the broad sector. He's saying he sees a short-term cyclical slowdown.
What? The problem is there's nothing new. You're making the point for yourself, for them. There's nothing new.
Okay, so,
There's no reason, they say, to get off the fence. And you know what? You know who agrees with them? Here's Jim Cramer this morning on Intel.
What the heck is going on with Intel? No real CEO, falling behind in their bread and butter chips, not being able to make these communication chips well, missing the whole gaming revolution. Where is Intel in the chip order of things? They were king.
Okay. So when I say
there's nanometer versus nanometer and all that nonsense.
Okay.
Just tell me why you should buy this stock now in the face of that. And this note.
Sure. No, that's a good question. That's a good question. Because, look, you want to be a trader or you want to be an investor? In case nobody's figured this out, I am an investor, a long-term investor. They're putting this downgrade out today. Maybe it goes lower from here over the next week. I don't know. But I know that you're getting a stock at a 1.1 times PEG ratio, okay? When we were talking a minute ago about value and whether there's risk in this market, that is the right price to buy for a long-term stock that has warts on it. Hang on one sec, Steph. The warts are, we know they don't have a CEO right now. Guess what? They'll get a CEO. We know they're behind on 10 nanometers. Guess what? They've got a $200 billion market cap. They are the Goliath in this space. They will fix that. You want to buy stocks as an investment when they've been knocked down with warts.
Jim,
you want to trade it here? Go ahead and trade it.
You're talking about, from an investment standpoint, that it's cheap. Why are you not looking at the stock on a growth-adjusted basis? This is a company.
That's exactly what a PEG ratio is.
But
that's
Jimmy,
exactly what a PEG ratio is.
But on a growth-adjusted basis, the stock.
Because in the last quarter.
Wait a second. On a growth-adjusted basis, the stock's growth is going to continue to contract over the next coming years. And now you look at it.
I fundamentally disagree. Fundamentally disagree.
It grows at what right now? 12%?
15%.
Okay, 15%. What's it going to grow at next year?
Probably 10%. And
well, then the street is way off because the street is modeling it 3 to 5%.
Okay,
and now measure it relative to its peers.
The last 3 quarters.
We'll give Steph her chance.
The last 3 quarters, the street has missed it.
One of the bullish cases to own Intel, and I've been in there too, is data center. And data center is actually exploding, but it's not for them. That actually last quarter disappointed. And I think if that continues to disappoint, you're not going to get a valuation call. You're not going to get value buyers into the name because that is the growth part of the story, and it's not growing nearly what people thought.
I think you're wrong.
Well, they missed. So how do you?
They did not miss.
Yes, they
did.
Wait,
no, they did not.
Yes,
Wait a second. On last 2 quarters, they beat on earnings, they beat on sales, and they guided.
Data center is what I'm talking about. Data center, not earnings, not revenue.
Let's talk about data center.
Piece of the story. Look, and that disappointed.
You're going to have data center growth for the next 2 years if you've got 3.7% global GDP growth, which is what most analysts are calling for. You're going to get data center growth. You've got a PEG ratio of 1.1. You've got sales that are 10 times what everybody thinks is the up-and-coming, the David versus the Goliath, sales of 10 times versus AMD, earnings 50 times what AMD's are. And you've got the growth there. So just look, the street's gotten it wrong for 2 quarters. I don't know why we think they're going to get it right in the third quarter.